Stocks just got hammered. SPY's down 5%. The Nasdaq 100, it's down 5%. Russell 2000, it's down almost 7%. Is this the crash that everybody's expecting? Let's dive into the charts and find out right now. There's a lot to talk about here, so let's dive right in and get updated on the narrative. You have the first top, and then you have the second top right here. This confirmed when it broke below the SPY lows from January of this year. We went down below that, bounced off of this rising trend line right here. That held, and then we formed a bear flag that took us right back up to this AVWAP line, which then proceeded to sell off even further. Now, over the last 3 days, we were putting together a decent rally, but then you had a market-like earnings event that took place yesterday with the announcing of the new tariffs, and as a result, the market puked like it hasn't puked in over 5 years. So we're seeing a huge sell-off, down 4.93% today. You're seeing the volume down here, extremely, extremely high volume that we haven't seen since late December. So where does that take us here? Because now this AVWAP line that's actually held up pretty well since the year-to-date 2024 beginning, which has bounced every time going back to August of this year being the last time it tested it, failed to hold today. That's a big narrative change right there and something that we should definitely be a bit nervous about. So the next level here that we want to be paying close attention to is this rising trend line going all the way back to 2022. This rising trend line, I mentioned in other videos, it's not worth talking about at that particular time, is now worth talking about. Yes, there's a potential for SPY or the S&P 500 to drop below 500 or on the S&P down below 5,000. And that would take us to a testing of around 497 on SPY. And if it breaks below this rising trend line, then what we want to start to be paying close attention to is this rising trend line off of the 2020 lows. And this level here carries a lot of weight. So both of these are in play. If you can't hold this rising trend line here, there's a much bigger trend line that goes back to 2020 that would hold. Beyond that, you have a breakout level. I don't know how strong this level is going to be considering the fact it's only been tested as resistance in the past, but worth keeping track of it nonetheless. Now, another thing that I want to throw out there is the anchored VWAP off of the 2022 lows. This is where we bottomed when we had the huge pullback that lasted from January until late October. And here you have a area where the stock market has repeatedly bounced off of each of these levels, going back to early January 2023, again in March of 2023, here again in October of 2023, but it hasn't been tested since. This level here, what makes it interesting is it's in conjunction with this rising trend line off of the 2020 lows. So there's a lot of support right here in this area. So around this 495 level and downwards to about 470, there's a lot of support in that area. At 536, there's not that much to get excited about. Now, one thing that could happen is one of these previous lows here could act as support. It could find some support at a previous low and then form a much stronger support level as a result. The next one would be around 513, and then after that, it would be around 495. But that 495 level is going to also take you back to this rising trend line as well. Looking at the Qs, what we want to talk about here, again, the same double top, the AVWAP line, the retest of the AVWAP, the bear flag breakdown. We have this rising trend line that went all the way back to 2023. It did not hold. So what's a very interesting development here with the Qs, and we've already broken it on SPY, but on the Qs, you have a huge support level going back to the April lows of last year when we sold off. And that level got tested again in August, and that's what formed it. Now we're testing that again here at these exact lows. So 450 is a critical level for the Qs. There's a potential there for a bounce. And then when we zoom out a little bit further here, we have the 2020 lows. I don't think that this is at all in the here and now, but the issue becomes there's not a lot of support underneath for this market once you clear this red line here. So you can make a case that perhaps this breakout level could come into play, but again, you're still talking about a move down to 364 if that comes into play. That's why I think we got to start watching some of these previous lows for support to develop at those levels here. So watch these support levels here. If those break, there's not a lot of good looks for this market going forward. Finally, let's look at IWM. And this is a index really now with today's sell-off. If we're pulling up the yearly chart, guys, it's ugly. Yearly, we've wiped out all of 2024 gains. We're eating away at 2023. If we dip back down below these lows from 2022, essentially the market will have had no gains in the Russell 2000 or the small caps in over 5 years. That is a significant development there, and it just shows you how stagnant IWM has been, the small caps, plus just how reliant the market has been on the mega cap stocks. But looking at it from the daily chart, let's take a gander at this here, right? We have some major support that got violated today. This was a huge breakout level for IWM back in early 2024. It tested it on a couple occasions, held it, but then we broke below it today. So that's a concern. Now, there's still the potential that it recaptures it tomorrow or in the days ahead, and people don't really worry too much about that break, but it's got to do it sooner rather than later. But probably even more interesting is this rising trend line that goes all the way back to the 2020 lows. We're seeing a theme here across the indices. This 2020 lows are coming back in with the trend lines that were developed off of them. A lot of people didn't think we were coming anywhere close anytime soon to testing them. Here we are now. IWM, 2020 lows, it's getting tested there. It's closing right on them here today. So, again, where it closed at today on IWM, critically important that it finds a little bit of life, a little bit of bounce out of it. And then finally, if that level doesn't hold, then you have a huge support level underneath down into the 160s. I don't think that's in the here or now right now, but it could be in the days ahead. So keep that at least marked on your charts as well. One of the things that I tell traders, and there's this temptation right now to want to buy the dip, to want to be the hero. I always tell people, don't hero trade. Let other people be the hero. Let other people try to find the bottom. You don't have to be that person that finds the bottom. What you want to go after is the meat and potatoes of a rally, of a trend. You don't need to get into the rally right at the bottom or try to predict the bottom, and you don't have to get out right at the top. What you want is that middle section of the rally, that 80% of the rally that provides some of the easiest profits that you'll get. Trying to time the bottom will usually lead to greater losses. So don't be that person. Let everybody else figure that out. I'm not out there trying to figure it out. I'm going to let everyone else do that and put their capital at risk. And then when one sticks, that's when I'm going to start putting my trades to work. But it takes a lot of patience. It takes a lot of willingness to sit on the sidelines, sometimes longer than you'd like. So if you enjoyed this video, I would encourage you to like and subscribe. Let me know down in the comments below, what is your strategy right now? Are you all in cash? Are you long? Are you buying the dip? Let me know down below and we can discuss. Thank you guys, and God bless.